Hello everyone, welcome to my YouTube channel, Wealth Unlimited. So today we are going to talk about the investments and how important it is to start investments early in life. Further, we will discuss about the compounding effect and how it can help you creating a massive wealth in long term. So we are basically going to talk about the four major investments which you can do in India, which are fixed deposit and PPF, which gives you return of 6 to 8% per annum, investment in stocks and equity, which gives you return up to 15 to 25% subject to the market risk. Mutual funds, again 10 to 15%, which are also subject to the market risk, which means that your portfolio depends on how well the stock market or how well the market or economy of a country is doing. Next comes government and bonds, which gives you return to 7 to 10% per annum, which are fixed risk-free returns. In a time like this, where inflations are hitting 7 to 9%, and saving accounts are only providing you 3% to 4% of interest, you are actually losing the value of your money by doing nothing. So let me tell you about the fixed deposits and the PPF, which is also known as Public and Provident Fund. It's a fixed return scheme, risk-free scheme given by the government to the various people of the to various people of the country. And the next comes the investment in stock market and the equities, which can be done through demat by opening demat accounts. You can buy stocks for yourself, keep them, hold them, invest them in long term. So basically, the major difference come here when we talk about the fixed deposit and the stocks is that in fixed deposits and the public provident funds, you have a lock-in period, and in investment in stock market has no lock-in period, but again it is subject to the market risk. So it depends on the appetite of a person, like where he or she would like to invest. Next come mutual funds, which provides you 10 to 15% per annum return, and it is majorly done by the various big short companies like ICICI Bank, ICICI Bank Securities, SFC Securities, and there are the wealth managers who are there to help you out and managing your money on your behalf. Next come government bond and securities, which are provided by the government by giving the fixed return, risk-free return on some percentage. If you ask me, where I put my money, then I would like to say that like I have a lot of investments in stock market right now, and I also do invest in mutual funds in systematic way. So some of the best stocks which can provide you easy return and which are less beta stocks and there are less risk of falling are some big short names like TCS, Tata Consultancy Service. Then you have Infosys in tech stocks, and you can always go with the Hindustan Unilever, Dabur, Nestle, which are some big names in the FMCG sector of the country. And in banking sector, you can always go with the ICICI Bank and HDFC Bank, my personal favorites, which are there in my portfolio as well. Next, there is a detailed comparison between the risk-free investments and the market risk investments. So if you can see that people who are looking for assured income should always go with the risk-free investments, as they will provide you fixed returns every year. And people with market risk investments, people should look who are looking to accumulate a huge wealth in long term should go with the market risk investments. Fixed returns on the capital every year of 6 to 8% you can easily get in risk free investments, whereas you have a potential to beat inflation with return of 15 to 30% per annum with market risk investments. Risk-free investment has a long-term lock-in capital period, whereas market risk investments are short-term lock-in periods to no lock-in periods if you invest in stock market. So risk-free investments are suitable for people who seek high return and risk, and risk investments are suitable for people who does not fear any kind of volatility in the capital. A long-term strategy with limited intervention is a risk-free investment thing, and reaching long-term goals in short-term period is a market risk investment thing. So alternatives for the Risk-free investments are fixed deposit, provident funds, national pension scheme, whereas the market risk investments alternatives are stock, equity mutual funds, cryptocurrencies, and NFTs. So there are plethora of options where you can invest your money. Consider investing your hard-earned money, but again, you have to understand your risk appetite, and that will decide what sort of investment you would like to make. So this is now what and why you should start investment early. It's a very important topic and it's a very important concept which I would like to show. So this is the chart or the graph or the numbers you can see on your screen, where you can say that when you start investment at the age 20, and if you only invest 2,500 rupees per month, in 30 years later, when you are at the age of 50 years, you have a corpus of 1 crore 10 lakh 51,617 rupees, while you have only contributed 9 lakh rupees towards your investments. If you start your investment after 10 years, and even if you double your investment amount per month, which is 5,000 per month, and you invest till 50 years of age, which is 20 years later, your corpus will become 57 lakh 27,596, while you will be contributing a total of 12 lakh rupees to the corpus. And if you delay your investments further to 40 and double your investment again per month, which becomes 10,000 per month, 10 years later, you will have a corpus of 24,66,807 while contributing a total of 12 lakh rupees towards your investments. The rate of return used here is 13%, which is the average 5-year returns of most of the mutual funds present in the market. Next, we'll talk about the power of compounding. So, compounding, what the name itself suggests, that it's a way to make small savings help you generate a massive wealth over time. Better even if it is your entire life. This word justifies saying consistency is the ultimate key to success, and it's all about a long game in savings and investings. I'm not saying that you should not enjoy your life and you should always be thinking about the investments and the kind of things you want to do in life. But I want you to realize the potential of creating a massive wealth out of small, small savings. Definitely, you need to understand what is your risk appetite, and according to that, you should start diversify your portfolio between mutual funds, stocks, PPFs, and put your money in such asset classes where you can beat the inflation and grow your money with good time. So this is what I wanted to share, and I find it very, very interesting, like how you can create wealth in long term. And I'll be sharing some mutual funds and names and stock names which I have been part of or which I have been investing in from last 2 to 3 years. And this YouTube channel is new for me, and I hope to grow and further moving on to help you grow alongside me and my team. So thank you. Thank you for watching. And if you like this video, hit the like button, share it, and subscribe.